So you're in a fund of funds, and these are funds that invest in other funds. Good afternoon. Today we will be talking about real estate funds, and these are different than real estate syndications. And if you have any other questions as we go along or are interested in investing in a fund structure, you can always go to callseth.com and we can get you all set up and get you all the information you need. So real estate funds, you know what? You know why I like real estate funds? Because you have the word fun in there, and anything that makes money and has great tax benefits is fun in my books. So real estate funds. Actually, you know what? Before we start talking about the funds, I did a previous video about real estate syndication. So I want to highlight the differences between how investors invest in a syndication versus a fund. So with the syndication, like you'll remember, we'll have the investor. I'll just draw a stick figure investors right here. I think 3 will suffice. And these investors, they will invest into a real estate syndication, which is a single property, whether it's a multifamily property, retail, industrial, office space, you name it, mobile home park, that sort of stuff. So these investors will invest straight into the property, and then that property will be run by the general partnership. These investors have the choice on whether or not they want to invest in that specific property, because like we learned in the last video, the general partner, once they have the property under contract, the GP will then approach the investors with the investment opportunity, and at that point they can say yay or nay about whether or not they would like to invest. With the fund structure though, I'll just draw my stick figure real estate investors. With the fund structure, the investors don't invest in a specific property. They invest in the fund itself, and it's the fund that will go ahead and acquire multiple pieces of real estate. And depending on the fund investment criteria, it can be just, let's say, retail, just office space, just multifamily, or it can be a mix. The fund will have investment criteria, and so instead up here on the syndication side, the investors will say yay or nay on the specific property. Here, these investors will decide whether or not they would like to participate and invest in the fund based on the fund's investment criteria. And again, that fund is managed by the general partners who have control over that money. Lots of really interesting things can happen with funds, and there's even something called a fund of funds, and it's basically a fund that will invest in other funds. But we won't get into that stuff today. We'll save that for a later date. So how is a real estate fund structured? Well, many people, I would say for beginners just getting into real estate investing, they have the impression that you invest in the property itself, but that's not the case. You're actually investing in the entity, and it's that entity that owns the piece of real estate. So for instance, let's say we have a multifamily building here. I'll just draw a little door right there with the doorknob. There we go. Oh, maybe we'll add a roof. There we go. And the smoke, there we go, a chimney. Okay, so how is a fund structured? Well, we have different types of shares. So we have, usually it's structured A, B, C to keep things simple. And what happens is the fund will go out, and this even happens in the real estate syndication. The entity will acquire a piece of real estate. So usually this is done in an LLC, or as a limited partnership, depending on the general partner and some other things. I won't get into the big differences between these two entities. But what happens is the entity will acquire the piece of real estate, and the investors will buy shares or a piece of that entity in relation to how much money they're investing. And depending on how it's set up, share prices can vary depending on how many investors and how the general partner and the people running the deal want it set up. So we know that we're not buying the actual piece of property, or in the fund case, we're not buying parts of the different properties. We're actually buying shares in the holding entity right here. An A share will be held by the general partner. So A shares are for people who are controlling the deal. These are very valuable shares. And so if it's a person running the fund, they have the track record, they have the team, they have the connections, they have the experience. They're the people making the decisions about which properties to acquire, when to sell the properties, the game plan, the business plans for each property, et cetera, et cetera. So these people will own the A shares. So I'll just put a GP here. The B shares can be really, really interesting. There's lots of really neat things you can do with B shares. So let's say the fund, I'll draw the picture of the fund right here. Let's say there's a couple properties in the fund. And there's a property here on the outside, and the fund wants to acquire it. It's a good piece of real estate. But let's say this owner doesn't want to create a taxable event. And this is where you can get really creative with B shares in a fund structure. If this vendor sold to the fund, that would create a taxable event. But what the fund can do, because it really wants to scoop up that piece of real estate, in lieu of payment, the fund can offer B shares to the owner of this piece of real estate in exchange for the property, and that property will then get absorbed into the fund, and that's not a taxable event. So this is the really creative side of real estate investing. And if you have any questions about what I just did there and the implications, because it's really, really interesting, you can just go to callseth.com and we can set up a call, and I'll walk you through exactly how that strategy would work. Really cool stuff you can do with B shares. Also, B shares can be used, not so common, but let's say there's a contractor doing significant upgrades to a property. In lieu of payment, that contractor can be offered B shares in the fund for doing that work. Again, it's not as common. I would say the most common application of B shares would be absorbing properties or other assets into the fund. And because the fund structure is not just limited to real estate, but because this is a real estate show, we are talking just about the real estate application for B shares. So I will put tax owners assets. C shares. C shares are the investors. These are the types of shares investors. If you are investing in a fund structure, you will be buying up these C shares. The big difference between an A share and a C share, the A share has all the control. The A share is held and owned by the people making the decisions about the fund. They are the people steering the ship. The C shares, they're the investors. They don't have the real estate knowledge. They don't have the real estate experience, but they get to participate in all the wonderful things investing in real estate has to offer, including tax benefits, including cash flow, including appreciation, all that good stuff, which is why real estate is the most beautiful asset in the world. So I hope this really helps in outlining what happens in a fund structure. So we have ABC. Just start singing the alphabet song if you ever forget the types of shares, and you will hit those letters of the alphabet. Now, this isn't set in stone. Every fund can assign values or assign voting rights, whichever way they want. ABC is just the most common way to structure funds. Why would somebody want to invest in a fund rather than a syndication? Because like I said in the last video, in a syndication structure, the investor has more control. They can choose which investment opportunities they would like to go into. But with a fund, you have the fund, and the fund will start scooping up various properties, but the investor doesn't have control. That's why you need to make sure the person who is in charge of the fund has the real estate pedigree and you are very comfortable with them managing your money. Well, there's a couple really good reasons why you would want to invest in a fund. And if you want to learn more about funds, if I didn't cover things in enough detail, just go to callseth.com and we can hop on a Zoom call face to face and have a quick 20-30 minute chat just to see where you are and where you would like to take your real estate investing. So benefits of investing in a fund. Well, first of all, I would say time. And it's not really the investor's time, but it's the time in which you need to close a deal. What happens in a syndication is the general partner will get a property under contract, then they have to go and raise all the money from investors, then close on the deal. Well, let's say there is distress in a property. Let's say the vendor has health issues, or the property hasn't been looked after and all the tenants are leaving and it's crumbling, the parking lot's turning to gravel, all sorts of bad stuff happening. A fund can come in and get a discount on that property because they can close almost immediately, because I'm a huge history nerd, like you guys already know, but the musket, the gun, is already cocked and ready to fire. The powder is dry in the pan and it's ready to ignite, because the investors put their money into the fund, and then the fund acquires all the properties with that money. So the money's sitting there ready to rock and roll. So the fund can be more opportunistic whenever opportunity. I know I just use opportunistic and opportunities together in the same sentence. Probably not the best word choice, but you know exactly what I mean. The fund can be opportunistic in its acquisitions because it's ready to rock and roll at any time. The other good thing is a fund can buy and sell properties that are already in the fund. So in the syndication structure, let's say the property is being held for a 6-year hold period and now it's time to divest or sell that property. The investors get their money back, everybody's happy, and then they move on to the next syndication. But in a fund structure, the money doesn't get returned to the investors. So let's say this property has reached the end of its life cycle, so they've held it for 5 years. That fund will sell the property. The money from the sale will go back into the fund, and then that fund can use it to acquire more and more properties. So a fund is more of a long-term solution, that the fund will move, have a life of its own, and it actually goes through a life cycle too. And once the fund begins to wind down, it will divest itself of all the properties, and then at that point, the money left from the sales of those properties will be returned to the investors. But funds, it's more like a living entity, whereas a syndication is a one-off deal. A fund has a life of its own. And like I mentioned before, a fund will have investment criteria, but that doesn't mean that fund will strictly stay investing in those types of properties. There's almost always disclaimers in the fund saying, hey, if a really good opportunity comes up, that's maybe not B-class multifamily buildings in the Southwest, but a really good opportunity that would make some really good returns for the investors comes up, that general partner, the people steering that fund, are able to go out and acquire that, because the main point of having the fund is to make money. I have 3 money signs right here, just to emphasize the point. The fund is there to earn returns for the investors. So we have time. We have, you don't have to deal with buying and selling individual. Everything is looped together in the fund. And because the fund is investing in multiple properties, you're spreading out your risk. So instead of investing in one single property, whether it's multifamily, industrial, retail, office space, mobile home park, you have a piece of a larger piece of the pie, or you have a piece of the larger pie, I should say, or cake. Always a fan of cheesecake, cherry cheesecake, or strawberry cheesecake would be my 2 favorites. So we can make this a strawberry cheesecake fund, but it's more spread out, so you are diversifying your risk. Really neat stuff you can do with real estate funds. So if you have any questions about the fund structure or real estate investing in general, just go to callseth.com and we'll set up a call. No pressure. I'm just here to help you and answer any questions and make sure you get the information you need so you can make some educated real estate investing decisions. So I hope you really enjoyed this, learned a lot more about how funds work, and just remember ABCs for the share structure in funds. Have a great day. future, you can always go to callseth.com and we can get you all set up and get you all the information you need. So real estate funds, you know what? You know why I like real estate funds? Because syndication. So I want to highlight the differences between how investors invest in a syndication versus a fund. So with the syndication, like you'll remember, we'll have the investor. I'll just draw stick figure investors right here. I think 3 will suffice. And these investors, they will invest into a real estate syndication, which is a single property, whether it's a multifamily property, retail, industrial, office space, you name it, mobile home park, that sort of stuff. So these investors will invest straight into the property, and then that property will be run by the general partnership. These investors have the choice on whether or not they want to invest in that specific property, because like we learned in the last video, the general partner, once they have the property under contract, the GP will then approach the investors with the investment opportunity, and at that point they can say yay or nay about whether or not they would like to invest. With the fund structure though, I'll just draw my stick figure real estate investors. With the fund structure, the investors don't invest in a specific property. They invest in the fund itself, and it's the fund that will go ahead and acquire multiple pieces of real estate. And depending on the fund investment criteria, it could be just, let's say, retail, just office space, just multifamily, or it can be a mix. The fund will have investment criteria, and so instead up here on the syndication side, the investors will say yay or nay on the specific property. Here, these investors will decide whether or not they would like to participate and invest in the fund. Is managed by the general lots of really interesting things that can happen with funds, and there's even something called a fund of funds. That is basically a fund that will invest in other funds. So how is a real estate fund structured? Well, in many cases, I would say for beginners, just getting into real estate investing, they have the impression that they're investing in the property itself, but that's not the case. You're actually investing in an entity, and it's that entity that owns this real estate. So, for instance, let's say we have a multifamily building here. I'll just draw a little door right there. There we go. Okay, so how's the fund structure? Well, we have different types of shares. So we have usually A, B, C, D, simple. And what happens is the fund will go out, and this even happens in the real estate situation. You actually will acquire a piece of real estate. So usually this is done in the LLC, or as long as the fund is depending on the but what happens is the entity will acquire a piece of real estate, and investors will buy shares or a piece of that entity in relation to how much money they're investing. And depending on how it's set up, share prices vary depending on how many investors and how the general partner and the people running the market is set up. So we know that we're not buying the actual piece of property, or in the fund case, we're not buying parts of the different properties. We're actually buying shares in the holding entity right here. An A share Ray Ray. Oh, what are you having? Okay, Ray Ray, I'm going to put Spider-Man upstairs so he doesn't get wrecked. Oh, that's a dinosaur.
Now we just have to finish this.
Ray Ray. Hey. Want to come sit down?